Hello and welcome to Donation Investment. This analysis is for Barrick Mining on the Toronto Stock Exchange as of 4th of August 2026 with a share price of 53 Canadian dollars 99. The full report is on donation.ca. Barrick Mining is one of the world's largest gold and copper producers. Tier 1 assets, quality 78, and cheap on-spot earnings at approximately 10.6 times trailing, approximately 8.7 times forward. So the medium call is a buy and the long a strong buy. The short call stays hold. Gold is basing below its 50 and 200-day lines, and Q2 earnings on 10 August sit inside the blackout window. Barrick Mining, formerly Barrick Gold, is one of the world's largest gold producers and, increasingly, a gold and copper major headquartered in Toronto. Its business is finding, building and running long-life, low-cost mines, a portfolio of Tier 1 assets anchored by Nevada gold mines, a joint venture with Newmont, plus Pueblo Viejo, Kibali and Loulo-Gounkoto. What sets it apart is the scale and grade of that reserve base and a bottom half of the curve cost position, with all-in sustaining costs near $1,720 against a gold price around $4,000. Business quality scores a solid 78. Valuation is what carries the longer horizons. On clean trailing earnings, Barrick trades about 10.6 times and under 9 times forward, cheap for a net cash Tier 1 major, and below a warranted producer multiple of roughly 12.5 times, an actual to warranted ratio near 0.85, comfortably inside the attractive band. Cross-checks agree, around 0.75 times net asset value, a bit over 5 times EV to EBITDA, and a free cash flow yield near 8.5% at spot. The balance sheet is net cash, roughly 7.1 billion Canadian in cash against 4.7 billion of debt. So the medium call is a buy and the long term a strong buy. So why hold for the short term? 2 reasons. First, the gold tape. Gold sits below both a still falling 50-day average and its 200-day line, though the decline is decelerating, down under 3% over 4 weeks. So it is basing rather than breaking down. That keeps timing at a middling 46, with no short-term amplification. Second, Q2 earnings land on the 10th of August, inside the 7-day blackout window, so the hard gate reads caution and entry conviction is wait. Minor leverage cuts both ways. The bull case is about 82 Canadian dollars if gold breaks higher. The bear case is near 44. Own it for the cycle. Wait for the metal to turn and the print to clear before adding. Now the other side of the ledger, a lower gold price hits earnings. Leverage cuts both ways. Q2 print 10 AUG is event risk both ways. Jurisdiction risk, Mali overhang, bear approximately 44 Canadian dollars. Now weigh the risk against the reward. The bull case is roughly 52% above today, the base case, the most likely, about 26%, and the bear case, a fall of about 19%. So you are risking about 19 to make 52. So, our call on Barrick Mining on the Toronto Stock Exchange, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donation Investment at donation.ca. The link to the full report is in the notes below. Have a great day.